Hello, everyone, and welcome to the Monday Open, hosted by the Vantage private client team. My name is Ollie, and joining me today, we've got Steve. How you going, Steve?
Good afternoon, Ollie. Good afternoon, everyone. Yeah, pretty tired after a bit of a walk downstairs, bit of a fire alarm, just a test run.
Oh, mate, rest and recover before you got baseball tonight. Surely feel better. Okay, so let's take it into the agenda for the video ahead. So starting off, we're going to take a look at last week, look at some of the major events which happened, and take a look at our key themes and see how this moved prices. Next, we'll move into the week ahead section. We'll put a spotlight on some of the major data releases coming up, see how this fits in with our key themes, and give our take on where we think prices will go. Next, we'll move into the technical corner, where I'll be putting a spotlight on a couple of different markets and analysing them using our top-down analysis and our technical indicators. And lastly, we'll move into our Q&A section, where Steve and I will be answering your guys' most commonly asked questions from last week. All right, so moving into last week, starting off on your guys' screen, you will see your top traded products from the week prior. Probably to the surprise of nobody, we still got gold sitting in and two different currencies on the USD and the Aussie dollar, as well as Bitcoin. I know that was a bit of a discussion point going on in the cold conference we were at there at last week. Steve, do you have any thoughts on it?
Yeah, it's pretty interesting, especially these sort of times when it comes to gold, which we'll elaborate a little bit further when it comes to questions, as well as obviously Bitcoin having a bit of a crash last week. So it is within that sort of month, October. So October the 18th, 2018 was the last sort of crypto crash. So interesting to see that dip recently, like last week. So we'll see how that goes.
All right, and let's take a look, see what moved the markets last week. So starting off the week last week, we did have a few public holidays coming in from Japan, Canada, and the US. Steve, I know we've spoken previously about the impact of public holidays in the markets.
Yeah, definitely with the liquidity, just less liquidity means that obviously a bit more volatility. What we saw last week was we also saw the China data. So first it was the consumer price index, but the more concerning was really around the PPI, or producer price index. So to give you a bit of context, it fell for the 36th straight month. So this is actually the longest price decline streak since the 1970s. And this was driven by weak demand, property stress, as well as industrial overcapacity. So it was quite surprising with that sort of data. But towards the later of the week, it was actually surprising with the exports and imports. So we saw with the China exports rebounded after hitting a 6-month low, despite the rare earths being down by 4.32% year to date, according to Reuters. Also, imports hit a 17-month high, which was mainly driven by a change of soybeans from the US to South America. It was also driven by crude oil imports, raw copper, coal, as well as iron ore. So good to see that from a Aussie front. I know that you'll be speaking more about obviously China and the impact it does have locally. with the Aussie. So it was good to see those sort of data come out of China. We also saw the RBA minutes. So this was a real interesting one with the RBA minutes. So it was actually a hawkish view of basically fighting sticky inflation. So during the actual once it was announced with the minutes, we did have an ANZ analyst forecast interest rates to be on hold until February 2026. We still had CBA, NAB, and Westpac just predicting probably one rate cut being November. So basically the same day as the race that stops the nation, so Melbourne Cup. And then the following day, we actually had the unemployment rate, which was actually a surprise. So before the actual unemployment data, there was actually a 50% chance of a November rate cut. It came in at 4.5 compared to 4.3, so much higher than expected. And now we're looking at about 80% or higher as soon as that came out. So it was also caused by the participation rate, which was higher. A lot of the unemployment came from the big four banks, obviously with quite a few jobs being lost there. It was also the highest since the COVID aftermath, which was November 2021, according to the ABS, so the Australian Bureau of Statistics. So a lot to be said about that. And now we can see that probably priced in that we'll probably see that November rate cut. So, fingers crossed for a lot of Aussies when it comes to their interest rates, especially around the sort of mortgage stress, etc. We also saw even the Canadian unemployment rate better than expected. We've previously talked about the sort of high percentage with Canada. To give you perspective, that unemployment rate is a bit different because basically Canada hasn't been able to keep up with the pace of immigration since 2022. So a lot to be said about the sort of unemployment rate. So it was good to see with Canadian perspective and the CAD, which would have reacted well to that. We also saw the US government shutdown, so that's been still ongoing since the 1st of October. So we continue to not see a lot of the actual data points. But one of the biggest events last week was the US-China trade war. So basically, China sent out to the global partners in regards to restricting rare earths, where they basically control about 90% of the rare earths, which has a domino effect on a lot of the global. So China kind of doing exactly what Trump did, but did cause Trump to come out and threaten 100% tariffs China, as well as as soon as that was announced, we saw the Nasdaq for as much as 1,000 points, end up 800 points down, but eventually recovered once Trump kind of did what we call taco. So Trump always chickens out, and then pretty much reversed the sort of tone.
Well, it's pretty much a reverse on the gold and silver markets as well. I mean, pretty much opposite to the Nasdaq. We saw on Friday gold and silver both trade into all-time highs before the taco came into play. They both had an absolute nosedive on Friday, falling off from their all-time highs. Although both have started off the week pretty strong. As well, in the all-time highs last week, we did have the Russell 2000, got the ASX 200, which came up the back of the Aussie unemployment data, as well as the Kospi, so the South Korean index. Alrighty, and so moving into the week ahead. So China continuing to stay in the headlines in terms of the major data events. We've got a fair bit of data coming out from them to start the week.
Yeah, so the Chinese data was actually released earlier this morning. So retail sales up, as well as GDP was up. We saw the unemployment drop. And the the 1-year loan rate was held at 3%. So that's equivalent to their sort of interest rate that has an impact on property prices, etc. But pretty much very strong data to kind of follow up last week. So, you know, good to see with that sort of data showing that we haven't had much data from the US, the second biggest economy. It's showing a bit of strength. So we'll see how that plays out. We've got also the CPI, so the Consumer Price Index, so around the inflation. So we'll see the UK. We're expected to also see the US CPI data despite the US government shutdown. So it's been advised that they will release that, but who knows? We weren't sure whether it was any of the data was coming out last week, but that's going to be key because what the Fed chair Jerome Powell has previously said is that the concern is about the dual mandate about the increasing inflation as well as unemployment increasing. So that'll be interesting to see how that plays out. We've got the UK retail sales as well as the Canadian retail sales. So it will be good to see with the Canadian retail sales how it actually backs up with the sort of positive data that we've seen. So that will be very interesting to be up to date with.
I find it interesting to think they've said they want to release the CPI data. I wonder if we'll see a taco on the CPI. But one thing we do know we're getting is the PMI data. So starting off, we've got the Eurozone PMI data, which is currently forecasting a slight increase on the previous, but not particularly notable for that one. So the current ECB forecasts are expecting a period of holding to carry on at least till the end of the year. And this has been supported by some comments from ECB members. We had the ECB President Lagarde, who's quoted saying the growth inflation risk becoming more balanced, while ECB policymaker Wunsch is quoted saying the probability of another rate cut has been receding. So as a result, on Friday, we did see some strong declines on the Euro indices markets. And personally, I do think, based on the comments there, we could be seeing a bit of Euro strength going forward. Next on, we've got the UK PMIs. So the UK PMIs at the moment are expected to rise slightly than previous. On Friday, following the unemployment data from the UK, we did see a comment from the Bank of England Governor Bailey, who was saying that the labour market data backs his view of policy softening. So right now, he's saying that they're not seeing a lot of impact from the tariffs. And depending on how this data comes out, it could actually increase the likelihood of near-term rate cuts from the Bank of England. So as a result, if we do see that data come out to strengthen that cause, we could see some selling on the pound. Lastly, we got the US PMIs, where the forecasts are looking slightly less than previous. So currently, the Fed rate tracker is pricing in a 99% chance of a 25 basis point cut at the next meeting. Personally, I don't think the PMI data will sway away from that. And given it already is largely priced in, I do think the price reaction will be somewhat contained following that data. We've also got a lot of the US unemployment data still delayed due to the US government shutdown, but who knows? If he's drip feeding it through, maybe we'll get a few of them this week, maybe a week after. And we've also got the daylight savings shift coming from the EU region, including Swiss and the UK. We spoke about the clocks changing, the impact that can have on financial markets in a video a couple of weeks ago. But if anyone hasn't seen that one or had questions about how it might impact on them, feel free to reach out to us in the VIP chat room where we will be discussing that a bit further. And that brings to the end of the week ahead section. So we'll move into the technicals. I will just share my screen with everybody on here. Coming off, based on the EU clocks change, I decided to pick two EU-based pairings. So on your screen, you will see the euro against the Swiss franc on the weekly chart to start off with. Reason why I wanted to choose this one is you can see by the blue line on the screen here, it's at the 0.925 mark. Reason why is because we are currently sitting pretty much dead on that mark here. And in historical terms, or pretty much dating back since 2024, we can see that prices do have a pretty key reaction to this price point. So I wanted to give a take on where I think it might go. So we can see at this price point on multiple occasions over the past 2 years. So we've got the 5th of August, we've got mid-August, got mid-November 24, got start of April 25 this year, and most recently we did have a close test towards the end of July around this price point where it seems to find support and have a pretty sharp increase off there, or a pretty sharp jump off there back up towards its averages. So right now, we can see it is in a bit of a downtrend, which is also signaled by a sequence of lower swing highs that being. Then they all are pointing down. We've also got our MACD, which has crossed over as of a few weeks back, which is the technical indicator typically to show that there is bearish momentum in play. So moving into the daily chart, I want to get a bit of an understanding of where prices could go, and I guess was the likelihood of where they could be going. Right now, I'm a seller in this market, but I am looking for confirmation of this. I'm looking for a signal to show that we are in a downtrend. So I can see as well by the sequence of lower highs. We can see on Friday we did break below this support price. For the trading week so far as well, we did see it start off even lower, but it has quickly traded up to this support price. So for where we are sitting now, I think if we see a daily break back above this price point and then we'll see a hold there, we could see it make another high as it trades towards its moving averages. Similarly, if we see the day close out below this price point and start off tomorrow moving down, we could see it then go towards a lower low. As I said, I am still waiting for a signal of confirmation to see if buying or selling momentum is in play for this market. But right now, given that we are at a pretty key price point, I want to see how the day plays out before I make a call on which direction I'll be going. Also, given that it is at a bit of a knife edge in terms of where it could go, you need to make sure you have an effective stop strategy or risk strategy on here. The next market I wanted to take a look at was the dollar against the USD. So I haven't had a look at this one for a few weeks now. I thought it was good to take a look. So you can see by the green box going up, we had a pretty clear ascending channel where prices were going up very steadily, a sequence of higher highs and higher lows. Although recently in mid-September, that was when we had the last Fed meeting, we did see a bit of a change of fortune and it's since been going into a descending channel. So right now, I've also highlighted on here, we've got a previous trading range where the Aussie dollar has been trading in since late April between 64 cents and 66 cents price points. Moving into the daily chart for here, I want to see where we think the prices will go. So we had a fairly range-bound week last week, but it is still sitting right in the middle of this descending channel. So for the price where we're sitting now, I want to see it try to make a new high here. If it fails to break outside of this ascending channel, probably around the 65.5 price point, and then trade down, fail to break above and move lower, we could see it then trade further into this channel to make a lower low. Similarly, if we do see it then move a bit lower here, we could see it hold on to the channel here. But if we see it move lower and fail to make a lower low below the 64.5 price point, we could see it bounce and then trade up further into the channel. Similarly as well, if we do see it break the channel, we could see it challenge the upper level of that range. So we are sitting right in the middle of that trading range. I'm still waiting for a signal where to go, but it is a very interesting price point for where we're sitting at the moment. Sorry, I'm just saying as well, we've got a question come up into the chat. So let's say Dave's asking if the gold pullback is going.
I might actually cover that question in the next. Actually, what we'll do is we'll go into the questions. Yep. And then it relates to gold. So perfect timing, and shout out to Dare, Matt. Good to see that you're watching, and I'm sure it's a good question. As for the question, I guess the main question is, what's driving gold prices at the moment? As for where it's going, whether the pullback's going to continue or not, I don't think anyone can really say. But what I'm going to do is I'm going to tell you basically my thoughts on what's driving the prices, as well as historical trends. So obviously with gold prices, we've seen it hit 4,000. It's now hit the high as 4,380 USD. That was last week. The main drivers is around the lack of trust of government and the fiat currency. So basically that means that printing money, like government's printing money, which also causes inflation, as well as also distribution of wealth amongst, you'd say, different classes. So maybe the lower middle as well as those of upper class. We've got central banks buying to hedge against inflation. We've also got the US easing cycle. So we've got the Fed looking at 2 interest rate cuts by the end of this year. We've also got probably fear of missing out as well, a bit of that. If you were located in Sydney, for example, you would probably see the lines in ABC bullion, which is basically for physical gold. So you see lines that could be probably about 50 meters or more. But there are a few sort of historical trends I've been looking at recently in regards to gold. So in the 1980, during that sort of time, one of the sort of first sort of gold bull runs, in about 5 years, it basically dropped by about 65% based on the US rate hikes. In 2011 to 2015, there was also a 45% decline. That was due to the USD rally. In 2020 to 2022, about 22% when it comes to, again, the Fed tightening cycle, so raising interest rates. So historical trends have said that, there is caution, considering that, we are seeing gold at record highs. I recall not only like a few weeks ago, UBS was predicting in 2026 the highest would be about 4,200 and the low being 3,600. So USD. So where gold is headed next, I guess no one knows. But I think everyone needs to also be conscious about the risks, about what's happened historically when it comes to the sort of gold rush. And for example, an example is also Bitcoin. So like I said a little bit earlier, 18th of October 2018 was when Bitcoin crashed. And it was quite a significant sort of crash. Obviously, it's recovered since then. But yeah, towards the end of the year, it's hard to say. So great question there. And again, shout out. Thanks for that.
Well, good. Let us know in the VIP chat room as well if you're going to be lining up at the ABC bullion dare. We'd love to love to discuss further. And question 2 I'll take over is, why are Aussie markets so impacted by the US-China trade war? Easiest answer for that is because China is Australia's largest trading partner, who does account currently for around 1/3 of all Australian exports. A lot of these exports are commodity-heavy markets, so say iron ore, natural gas, and gold. So with the trade war, it can have a negative impact on China's demand for Aussie goods, specifically on those commodities I just mentioned. So a decrease in demand for the Aussie exports will decrease the demand for the Aussie dollar and can weaken it, as well as declining on the ASX. So if this goes on longer, we could see a bit of a further decline on the Aussie dollar. So I'm sure for any people back home in Australia who are planning to travel overseas towards the end of the year, they are hoping for a pretty speedy recovery in that tension. And okay, that brings us to the end of the video today. So a recording of this will be uploaded on YouTube once we have concluded. As well, we'll be posting a link for this one in our VIP chat room, as well as our Telegram group as well. For anyone who's looking to get involved in a discussion about the markets or looking to ask Steve any questions, feel free to reach out to us through any of those channels on there. In the VIP chat room as well, if you're a bit more of a technical heavy trader, we do have a number of posts going in there daily from the Everest Fortune group, who do give a little bit of a take on the markets through the technical side. That's all from me today. Thank you very much, everyone, for watching. And Steve, I'll see you later.
Thank you, everyone. Enjoy your evening. Bye.